Hello, and welcome to the first video of Real Day Trading. You'll notice that the sound quality probably isn't great. There's no graphics in the front of this video. The site itself, the channel itself is pretty bare bones. All of that will be fixed and updated in the coming weeks. I just wanted to get a first video out to everyone to introduce the channel and answer some questions that I've gotten, as well as review a trade that I made recently and walk everyone through it. Okay, so let's start with an introduction. First off, this is not a trading channel that is going to be selling you any type of program or trading method, anything like that. I don't want your money. I don't need your money. Just get that out of the way. Second, what is it here for? Then what's its purpose? If I'm not here to fleece you, what am I doing here? Particularly since I don't like people, like really don't like people. So what the hell am I doing trying to help people? So let's go back a bit. When I first started trading, I got wiped out, lost the entire account. And was I smart enough to start with a small account? No. I decided to go and put 6 figures in the account, promptly wiped it out. Did it again. Thought, okay, learned my lesson. Now I know better. Some took a little bit longer, so that is improvement. Got wiped out again. And sitting there as I watched the last of my money get dwindled away in an out of the money option, it occurred to me that this wasn't the market's fault. This wasn't market makers out trying to get me, as if any one of them care about any of our individual trades. This was because I was an absolute idiot, moron. I was screwing up. I didn't know what I was doing, and I was the worst kind of idiot. I was the type of idiot that thought I wasn't an idiot. I thought I knew what I was doing. Clearly, I did not. So at that point, I decided I am going to learn everything I possibly can, something I should have done to start with. But what would be the point of doing that if the entire idea of becoming a full-time trader just isn't possible? What if it's always better just to put your money in SPY or a couple of mutual funds and just let it sit there and grow? Trading is a waste of time. You're always going to lose, right? 95%, whatever, lose money. But then I saw that there were traders that did this full time, and they did it quite well, and they lived quite well off of it. And it was a great life. Well, it's statistically impossible for those people to be consistently lucky. That means it's a learned skill. I may have been a moron, but I was an arrogant moron, which meant if there's a learned skill out there, I am going to try to figure out how to learn. And that's what I did. I read as much as I could. I watched every video. I joined all these communities, and I found out a couple of things. First thing I found out, almost all of those online courses and groups, they're all there to fleece you. They're there to take your money. And they're teaching you some bullshit method, usually involving low float gappers, which is the last thing a novice trader should be doing. It's not that it's not doable. There are scalpers out there, and they're very good at it. You can make a living at it. It's just one of the most difficult things to do in trading. So why would it be the first thing that traders learn when they come into the space? I'll tell you why, because it's the most marketable. The actual way to trade for a living, that's not a very marketable thing that someone could sell or oh, put on out of the money bullish put spreads and get 25% return on your investment. Nobody wants to buy that. People want to hear 3-bar method. You can make $10,000 in 20 minutes and you're done for the day. Look at my rented Lambo and the 15 computer screens I have around me, all my monitors. Yeah. So first thing was, this whole space is filled with scam artists. The next thing I realized was it is also filled with an inordinate amount of well-meaning idiots. People that have never had a profitable trading month in their lives are out there giving advice to other people on how to trade. How ridiculous is that? Someone who's never been profitable trying to tell someone on Reddit or on Twitter, oh, no, this is how you're supposed to do it. Okay. So that's the next thing I saw. And then finally, it was another group of people who, for reasons only their therapist, I'm sure, knows, were there simply to tell everyone else that this can't be done. That it's all voodoo, it's bullshit, you're wasting your time, you're going to lose your money. Why they want to hang out in trading subs, I have no idea. But that's what I noticed. I noticed these three groups of people, and no wonder people lose money, because in 2020 you had 10 million roughly new traders coming to the market. Retail traders now represent a larger portion of the entire market than I believe that when I hear that they ever have before. And all of these people are people who are trying to make a better life for themselves. They want financial independence. They want financial security. And what are they met with? Cynicism, thieves, and morons. Well, okay. Sounds like a fun time. So I set up Real Day Trading to teach people how to do this correctly, how to trade and be consistently profitable. And it takes time. I have gone through the rigors of graduate school. I have gone through corporate America. I have run companies. And I will tell you, learning to trade correctly is one of the more difficult things I've ever done. Not undoable, it's difficult. But yet, new traders come in and think they can get this in just a couple of months. And that's like going to medical school and skipping college, just right out of high school. You're going to fail, much like Doogie Howser. If you don't know who Doogie Howser is, well, it's messed up. So it takes time and it takes dedication. So how many traders who put in the time and the energy and dedication to learn it actually fail? Well, it's a hell of a lot less than 95%. Okay. So let's, now we got all that out of the way, let's start with, I thought I'd start with a trade that I made, because it kind of encompasses a lot of different aspects of the method we teach. Let's go to CVS. Here is CVS. Let me just let me clear all the drawings out here, and let's just remove all of the comparisons. Great. So here we have CVS. Here is the 50-day moving average, the 100, the 200, and you see CVS right here on December 9th had a slight gap up, and then it just kept going, starting a nice upward channel of movement until right around here where it starts to consolidate. I entered CVS right here on January 5th, kind of towards the top of the candle. It's breaking out of this compression, and I'll switch platforms for a second. Here's Option Stalker. You can see I entered right at this candle here, 3:05 p.m. SPY, this is a SPY here, dropping. What does CVS do? Not dropping, right? Okay, so now I have confirmation. This stock is not only breaking out of its compression, but on the daily chart, but it also has relative strength against SPY. Some water here. All right. So great. I'm in CVS. Okay. And then the next day, this happens. Huge red candle through the 8 EMA all the way down to here. Well, that sucked. Certainly sucked for my options. At that time, I had the $104 call options on CVS, which I got for the low price of, let's see here, $3. Okay. Well, I am now looking at this huge red candle. Now you would say, well, where's your stop, right? Because one of the big questions people have is, how do I know when to exit and when to stay in a trade? What's the difference? Because a lot of times you're staying in a trade and it turns out it just keeps getting worse. The nightmare continues and keeps going down and down. And eventually it went down so damn much that you just stay in the trade because the option's hardly worth anything at that point. Or you've already lost so much money at this, you think, oh, it's got to turn around. Well, you would think the natural exit point here for CVS, even before this red candle, probably the bottom of this candle here, which is 102.30, right? Right around there, 102.30. And you can see it's actually the bottom of that candle too. So you can draw a nice kind of line at 102.30 and perfect, right around there. There we go. Trend line. And that should be the stop, right? Right around there is a good spot. You don't want to go all the way down to the 50 EMA here, SMA, because that's at $96. I like CVS, but not for a $10 drop. You can also draw a pretty good upper trend line here. And you'll see that one comes in right around 95, 94.50. Certainly not if I wasn't going to wait to 96, not going to wait to here. So this is pretty much your stop area. Well, we hit that mark, didn't go below it, but why did we hit that mark? What happened here? Why is CVS doing this all of a sudden here? Well, okay, let's check out the sector. Healthcare sector, healthcare plans. I'm just going to go to sector. I'm going to go to healthcare. Healthcare plans is IX 1870, right? So I am going to CVS, and then I'm going to compare CVS to IX 1870, right there. Well, look at that. A huge drop. Turned out HUM decided to release their forecast that showed a decline in Medicare applicants, and that affected the entire sector. Does that hurt CVS? Not really, but when a sector goes down, it drags everything down with it. Kind of like relative strength to SPY. Well, a sector has its own gravitational pull, particularly since institutions tend to buy sector indexes in blocks. And when they're liquidating positions, CVS can get dumped into that. So here you have this panic selling going on here, comes right down to that line, but doesn't break through it, right? You get relative volume, all that, so I hold. One, it doesn't break through. Two, I felt this was a sector issue. Not only did I hold, I added. I added to the position. I bought those same calls, except now they were worth $1.50. So pretty much lost 50% of their value on that day. My average price now was around $225, $220. Okay, well, the next day what happens? Well, we did break through. We went all the way down to 101.35. So why didn't I get the hell out? Well, let's take a look. Let's take a look at the 7th. Right there is the 7th. Zoom into it. Okay. We open here and then immediately drop down. Why did we drop? Well, let's take another look and see what is SPY doing. Well, SPY is also dropping. So CVS is dropping with SPY here, right there. But then SPY continues to drop, and the next candle, get a double bottom, and CVS starts heading back up, and then it's off to the races it goes. This is why I also don't use hard stops, by the way. If I had a hard stop, this candle would have taken me out. Certainly, if I didn't get out over here, this candle would have. However, I wanted to see what CVS would do when SPY bounced. Now, when SPY bounced here, if CVS kept going down and SPY bounced here and CVS is still going down, now I get out. Option's probably worth like $1.10 at that point, but now I get out. But when I see this, that's when I added to my position. And I added to my position right around this candle right here, this one. That's when I added to the position. I took profit today when CVS was up at around 107 earlier this morning. So here you have a trade that I bought into strength, bought at the high of the candle, right around here. I held it through a sustained drop. I then increased my position, did not stop out, compared it to the sector, by the way, and 2 days later, wound up taking a really nice profit on the trade. So there's a example of a full trade and the thought process behind it. Okay, we have a lot of questions actually that people have asked. I won't be able to get to all of them, but myself and Professor 1970, one of our other esteemed professionals, will be joining me on Thursday to record another video, and we will get to some of these questions there as well. So let's start. Bag Chasing asks, that's a really good name, inspires confidence. Do you always set profit targets, or do you wait for technical breakdowns, a loss of relative strength or relative weakness? Great question, Bag Chasing. It depends on the person. It depends on the day, to be honest. Sometimes we'll set profit targets that, $1, $2. People like round numbers. You're looking at a stock, it's going up, you're like, I want to get $1 out of this stock, right? Or let's take a trade I did today, right? And let's see here. Today I did trade, okay, here, I'll go this one. SU, right? So looking at SU, this is not a huge mover. It, we're going to zoom this and then go back in here. Okay. This is not a huge mover. If you're not going to put a profit target of $2 or $3 on something like this. However, let me get off comparison. You see here, you have a nice steady increase, no stress, right? Until you kind of hit this bar here, I got out of this trade. I added to my winner right here, and that's key. That's one of the first key things. We are mentally not pre-equipped to think in terms of adding to our winners. What we think in terms of is taking profits as fast as we can, which makes no sense. If you're playing blackjack and you get dealt a 20 and the dealer has a 6-up and you get offered right then and there, would you like to double your trade right now? Double your bet? You should say yes. I mean, I'm sure there are some idiots out there that would say no, but you should say yes. Your odds of winning have gone up dramatically at that point. When you're in a winning trade, it means your thesis was correct. You were right. When I entered this trade here, actually down here, and it started going up, my thesis behind the trade turned out to be right. It was going to go up, and it continued to. So why would I bail? I should add to that. That's what I did. I added right around here, and then I got out right around here. Why? Because I had all day of a nice steady increase, and now here, all of a sudden, I'm starting to see consolidation right there. I don't like the consolidation. I get out. Particularly since I have here SPY going up, and all of a sudden, SU, which had been relatively strong all day, dropping. Right, so right here in these 3 candles, that pretty much told me time to get out. So I did, and then you see what happens right here. So, okay. Now, obviously, I could have stayed in and would have gone even higher. But normally, if I'm going to take profit, it's usually going to be either because I've reached a set percentage. If I'm doing a call debit spread and it's Wednesday, I'm going to look to take 30%, right? So I will put that order in the moment I make the trade. It hits that number and it fills. Or if I enter a trade like Apple and I have options, I might look to take $1 a contract. I don't have there's no real set number. What I am aware of is there resistance? Where is that resistance? And if it hits that resistance, it doesn't break through, or I start seeing right here relative weakness, which I saw right here in these 3 bars, after an entire day of relative strength, well, okay, then I'm going to consider taking profits, particularly since here is a stock at its all-time high. In retrospect, I probably should have just held it. Now that I'm looking at it again, it's at its all-time high. Stocks at their all-time high is one of the best times to go long. I should have held this stock. But it's also in the energy sector and the oil and gas integrated index. And we can take another quick look there in the oil and gas integrated index, which is the IX 2030, which is right here. And yep, that has been pretty bullish. Nice strong upward chart here. Good relative strength on that index. Broke right through horizontal resistance here. Yeah, that is a stock I should have considered keeping. Another trade I'm in right now is BCRX, and there's one where I did the opposite. I actually averaged down. Here you have the 5-minute chart, and I got in right around here, 1727, fell all the way down to here. I averaged down to where 1650 is my average. And as you see in after hours, it's going. Why? Because this bar here, one of the other questions we have is, what counts as confirmation, right? Racer X asks, can you talk about confirmation before taking a trade? I'm getting to be masterful at setting alerts at horizontal levels that do the opposite of what I expect. E.g., stock X breaks level at $40 for a long trade. It will peekaboo. What the fuck is peekaboo? And then have a significant reversal. Oh, okay, I see contextually what you mean. I'm better at trend lines, but still suffer from the peak. Well, you're obsessed with peekaboo. Peekaboo, where it breaks and then reverses. Okay, so what you're used to is a stock that maybe BCRX on November 3rd here punches above the 200-day moving average. Well, actually, this gap down, so never mind on that. Let's take an example here. October 26th, it goes above the 100-day moving average, and then down, consolidates here at the 50, and then a huge gap down, right? So here's a false breakout. And if you went long on this day here, all the way at 1577, well, you either had a hold at 1150 and hope, or you lost quite a bit of money as this dropped down. But here on this bar, it goes through the 50. It goes through a pretty well-established long algo line here. This one here, we know it's an algo line because of the high volume, all the way down, all the way through, breaks through that. Then it breaks through the 200-day moving average. Then on top of that, it breaks through fairly significant horizontal resistance here. So you have pretty much 5 breakthroughs. And then what does it do today? Continues. This stock is extremely bullish. And the all-time high for this stock is right at 1845. I think it gets there. I'm currently still long and might just stay long. Thinking about selling in after hours. I'm in profit now by about 65 cents a share. I have several thousand shares. That's pretty good profit. I'm going to hold it because I feel this is confirmation. So Racer X, I hope that answers some of it. The more you have, the more you have confirmation. So when you just have it broke through one SMA and it did it on low volume, you have to have a checklist, right? Does it have high volume? Is the market strong? Is it relatively strong? How many different technical lines did it break through? How many breaches were there? Is it consolidating, etc.? The more checks you have, the more you're confirmed that this breakthrough, either up or down, is real, not noise, but an actual signal. Okay, well, I don't want this to run too long. I just wanted to introduce you to the channel, talk about, give a trade example, and answer at least 2 of your questions. But we will have more coming very soon. I hope you subscribe. I hope you put comments. I hope you like this video. And if you have questions, read the damn wiki. That's how I should sign off every single one of these videos. Read the damn wiki. I type it out probably, I don't know, 25 times a day. Why? Because everything literally is in the wiki. It is the most comprehensive trading guide you will find. It is the wiki of the subreddit, Real Day Trading. So read that. But if you don't have your answer there, of course, put it in the comments, and I hope you share this and invite others because our mission is to help people become consistently profitable traders.